to another episode of 𝐶𝐸 brought to you by ClueTrack. Each week, we dive deep into a different industry to learn what drives the customer experience. What are people talking about that make them happy and that make them unhappy? And what can we learn from a different industry than the one that we work in? Today, we're going to be talking about the banking industry. And I welcome all of the people watching that are in the banking industry. I think you're going to learn a lot today. I also welcome everybody that is not in the banking industry because we are going to provide takeaways that will apply to your business as well. As usual, I am joined by two incredible guests. First of all, I have Melissa Douros, who is a former colleague of mine. She is the head of digital product experience at Discover Financial Services. How are you, Melissa?
I am good, Dan. Thank you so much for having me.
So excited to talk to you. It's been a little while since we've been able to talk shop, so I'm excited to be able to do it on the show. And we also have Mr. Jeff Sheehan. He's a customer experience consultant and author of the Customer Experience Management Field Manual. How are you, Jeff?
I'm great. Thanks so much, Dan. Nice to see you. And
good to see you. And as usual, we try to bring a global perspective here. So, Jeff, you are coming to us live from Ireland. Is that correct?
Yeah, right here in Dublin.
Fantastic. So between you in Dublin and between Melissa and me in Chicago, we've got the whole Irish community covered, I believe.
You could throw in Boston and New York and you'd have it covered.
Exactly. That's awesome. Well, as I said, today we're going to be talking about the banking industry. And I know both of you guys are very familiar with this industry. And I want to start with a little bit of a definition to set the table. Okay, so today we're going to be comparing traditional banks with neobanks. Now, a traditional bank is a financial institution. We know these names. These are all really big names in the United States. They're the ones that have the physical locations on the corner, the branches. You've definitely heard of all of them. Neobanks are also known as an online bank, are going to be internet only, virtual. They don't have physical branch networks. And we thought it was really important to compare the two of these because they have really emerged from different places. Traditional banks have been around forever. The new or online banks are certainly newer to the scene. So before we get into anything, Melissa, I'm just wondering, any thoughts up front on how you think these two types of organizations might be different from one another?
So I think what I would say in the beginning is they have two different types of populations. And I think there's a comfort and security for those that are not used to having their money just be in a digital bank that has that bank on the corner, right? There's a Bank of America. If something happens to my money, if there's fraud, I feel that sense of security that I can go into that bank and talk to a human. And that is a big connection for people who are used to having that. But populations are changing and thoughts are changing and the way we interact with digital channels are changing. So obviously that would bring to our finances as well. And so people are getting much more comfort with having that digital relationship with their financial institutions, especially with many banks having no fraud liability and the ability to contact someone if you do. So I think as we change, the relationship with our bank is changing and we're growing more comfort with that digital.
And Jeff, do you think this is generational or do you think that it is cross-generation?
I would be speculating mostly, but I do think that there's a bit of generational demographics at play where maybe those that are sort of born digital would be comfortable and have access to a mobile device or an iPad and those kind of tools to get to their banking. But I also think I wouldn't want to confine it to that. There's some preconceived notions in that. I'm I guess I'm a boomer, and I can't believe I said that out loud. And but I use Apple Pay all the time, and a friend of mine was just here telling me that he's never seen anybody use it before. So and I know that my kids, who would be millennials, are not using the sort of the bill splitting apps and the digital apps to pay for things. So and I'm just one small example, but I'm sure I'm not alone with that. So I think there's a commodity banking. This is how I sort of see it, not by demographics, but by commodity banking. Checking account, bank deposits, things like that. and then the sort of more complicated banking, things like mortgages and investments and wealth management, because there's certainly digital treatments across all of that. But
For sure.
yeah, I don't know how it breaks down demographically, but just one more point there. In this country, I know we're focusing on the United States, but we've seen just an explosion of digital first banking here, and it's largely being engaged by a younger set of consumers and banking customers.
Yeah, I'll tell you, my family, it's similar. My father, who is going to turn 80 this year, has never visited an ATM machine because he loves walking into the bank, as Melissa said, and having them say, "Good morning, Mr. Gingiss," and they know him, and that's where he goes to get his money. My kids, who are teenagers, just got their first debit cards, hooked them up to Venmo, and have never visited an ATM either, because they're just so used to moving money on their phones that it's perfectly natural to them. So I think it's very interesting, and that is why this is such an interesting industry. So let's get into it, and let's see what 𝐭𝐿Track has found in terms of what's going on in this industry. So if we start with traditional banks, what we found was that there were 4 major category drivers towards customer satisfaction. The first was convenience, and we're going to talk a little bit more about what that means. The second was mobile app performance. The third was the ability to do mobile banking. And the fourth was checking, which always surprises me that checking just will not die. It continues to be a product that people want, which I find hilarious. So Melissa, any of those strike you as interesting or different or surprising? And it's okay if the answer is no.
I don't find that surprising. And I think a lot of what's driving even some of, maybe the less tenured with digital generation is that factor of convenience. And so it's convenient to walk into my branch, but the more that we make digital banking more convenient, that shift in behavior is happening. No surprises by the mobile app. I think a lot of us know they're more secure. A lot of times they're faster. They work off the phone, not a Wi-Fi connection. So I think no, but the checks, I guess maybe that is my last one. That continues to surprise me as well. But I have to say there are some utilities. There are, some people that we interact with that still demand that check.
Okay, so here comes the $1 million question. When I put up the neobanks, how do you feel the list is going to be similar or different?
I don't know if it'll be much different. That would be my hypothesis, is that convenience is still that overall factor.
Okay.
Yeah,
Jeff,
I'd agree with that.
What do you think?
I'd agree with Melissa. I think maybe you'll see some app performance number, go increase. Mobile banking would increase, but I think in terms of proportion, it'll be consistent.
All right. Well, you guys, this is why we have you on the show, because we bring the industry experts on. You guys are correct. The app performance and convenience switch places, but they are still the 2 top ones. We do add a response time in there, which is pretty interesting, and some other things that are a little bit less impactful. But yes, even with new banks, convenience is really key. The app performance certainly jumps because it is going to be all mobile driven. And we'll talk about it, response time, in a bit as well. So before we move on, I'd like to tell you a little bit about our friends at 𝐭𝐿Track. 𝐭𝐿Track is a customer experience analytics platform that helps brands understand why their customer experience drops. This helps them reduce churn and increase profitability. Okay, so we learned that convenience is a key factor in both traditional banks and neobanks. Let's talk a little bit about what that means, because actually you see some similarities across the two, but the wording's a little bit different. I want to remind people that all of this data comes from tens of thousands of online reviews of traditional banks and online banks. So we're taking customer verbiage here. We're not making this stuff up. But one word that certainly pops out, I think, as you can see across the board, is the word easy. Jeff, what do you think when you think of easy?
To me, easy is effortless, frictionless. It's one and done, and and you can trust it. If I don't trust it, then I'm going to check. I'm going to verify. I'm going to do another step. I'm going to maybe go to another, another channel to verify. I'll call to make sure you got it. And those kind of things. Yeah, it's fewer clicks. The user experience is more streamlined, and it's built to serve me the way I would behave as a customer, and not so much for a compliance or a policy kind of driver.
So, Melissa, when I think of convenience, I think of speed as well as ease. But as you can see from these subcategories, it's almost all about being easy. So, how do you react to that?
So I think that's absolutely true. Obviously from the data, but just from talking to people, from customer reviews, reading my own data. One of the things that we don't make generally easy for people is logging in. And so it's one of the number one complaints, every company everywhere. Passwords are different. How do I know the password in order to log in, as they are different across industries and the restrictions. So how easy can we make it to log in? And then really, how easy can we make it to move their money? So once I give you the money, how easy is it then for me to get the money out? How is it easy for me to pay people, to pay my utilities? And so I think when we think of easy, it's, all of the relationships, the transactions with ourselves and our financial institution, and being able to give them money and get it back out.
I can't help but be reminded of a project that you and I did together at Discover. This is now a number of years ago, but I think that it really is relevant here. We noticed that the number one reason why people logged onto the credit card side of the website was to see their most recent transactions. But at the time, we didn't make it that easy to get to those. There were several clicks to get to those transactions. So we brought forth, and this is the first company to do this. Now every company does it. But we basically created, at the time, we called it a Facebook feed on the homepage, so that as soon as you logged in, you saw your 10 most recent transactions. And I'll never forget our reaction when we saw what happened immediately after launching this, which was that tens of thousands of people logged in and logged right back out. Mm-hmm. And if you're Jeff Bezos, that's like the worst thing ever, right? But on a bank, that is brilliant, because we gave people exactly what they wanted. We made it so easy. They didn't even have to click on anything, and they were gone. And I don't know if you remember that I used to tell the team, Melissa, that nobody wakes up in the morning wanting to go to their banking website. And the more that we know that, the more that we can think through that, the better experience we can provide.
Yeah.
Yes, I have to agree with that. And I think there's this notion of, if we build it, they will come, and that they want to spend 10 minutes, they want to look around, they want to browse as if it was an offline store. And that is not true. They want to get in, get out what they want. They want their relationship with us, not us to force ours upon them.
Right.
Exactly. Right. Which means no pop-up ads, no cross-selling or upselling. Just let me do my thing and get on with my day. Jeff, any thoughts on that example, or just broadly?
Yeah, I love that story. But one of the things, any digital channel, but the digital first banking, they take advantage of that biometrics in your login. So all of my banking I do on my phone. I look at my phone, I touch the app, touch the login. It figures it's me. If I've opted into all the biometrics, and I'm in. So it's incredibly easy, but it's that marriage of the process with the security features of the devices that is really where a lot of the best, I think, experiences in digital banking or digital financial services in general have focused. So that to me is easy. You've thought about convenience, security, compliance, all those boxes have been ticked just by using the biometrics of the features of the devices people will use.
Yeah, and Melissa mentioned logging in. I always recommend to my clients to forget your password on your own site and go through that lovely process, because nobody's figured how to make that one easy yet. So, all right, I think we can all agree that ease of use is going to be a key part to customer satisfaction in banking. And let's face it, folks, in almost any industry out there, people want convenience. They want it to be easy, fast, and they want to move on with their day. Sure, if you are a coffee shop or a retailer, people may want to spend more time with you, and that's okay. They still want the process to be easy, right? So if I'm searching for clothes in a physical store, I don't want to then have to stand in line with 12 people in front of me to check out, because that's not easy. I still want to be able to, the parts where I'm like ready to move, I still want it to be easy. All right, so now we look at the top positive aspects. These are the things that drive positive online reviews. So every review is coded as either positive, negative, or neutral. And in order to get to positive, these are some of the influences. And you can see the light tan color are the neobanks and the dark brown are the traditional banks. So when we compare some of these, I think it's really interesting that we see convenience and app performance right there at the top, as we mentioned. Response time, as I mentioned before, becomes a really big issue for neobanks in particular. And as you go down the list, you start to see the traditional banks become a little bit higher. So traditional banks, maybe not surprisingly, checks have a bigger impact, cash deposits. And then towards the end, really interestingly, security, which Melissa mentioned, software updates, call support. You don't see anything from the neo. You only see the traditional banks, these being positive aspects. So any of these stick out to you, Jeff, as being ones that either are surprising or that kind of confirm your beliefs?
Well, I don't know what the full context of this data is, right? So if we're talking about a particular offering or just the overall set of offerings that a traditional bank versus a neobank would, it seems to me this all makes perfect sense for talking about depositing your paycheck and checking your balance and moving money around from, say, checking to savings or paying, credit cards and other bills, with an app. But if you're going to talk about the more complex things like mortgages and insurance and maybe some other offerings, this would surprise me because there are services where you want to call and they require calls. Things like adding someone, opening a new account maybe, or taking someone out of an account. So this wouldn't surprise me at all for a more simple sort of paycheck deposit and using that money. But it would surprise me if it included the things like mortgages and more complicated products.
Let's keep moving here. One of the things that 𝐭𝐸 likes to do is look at time and how time can impact some of the different either positive or negative impacts to customer experience. Now, what we're looking at here is the first half of this data versus the second half. And you can see that the first half is January to August of last year. The second half is September to April of this year. And what we're looking at is the difference between the first and second halves. And why this is important both for the banking industry and for others watching this program is that the things that your customers care about are not static. They change over time. And sometimes it's seasonal. Sometimes it is based on what your competitors are doing and expectations changing. But those of us in the CX business know that customer expectations are always getting higher. And this is where this data really starts to pull some of that out. We can see that cash deposits, transactions, convenience also continue to get more and more important. Then interestingly, as we go down again, we start to see certain things that the neobanks are now facing. Extra charges and fees, card services, and in the wrong direction, security. So, Melissa, I want you to talk a little bit about this because you mentioned security earlier. How do you think about security from a traditional bank perspective versus an online bank perspective?
Sure. I think we've had a lot more time to understand what security means to our customers. We've had the budgets. We've had the ability to go talk to them for a greater length of time. As you talked about, their expectations change. As their problems change, our solutions need to change to fix them. And so we actually, as the more traditional banks, and kind of speaking on all behalf of us, we started off as a call center, right? We didn't start off as digital banks. And so we leaned more heavily into hiring those agents and training them and the ability to have those conversations. And if you think about the neobanks, they're over indexing on the digital. And while that's great for maybe 95%, when the going gets tough, when they really need that human connection, we have the ability to do it. And so it's not surprising about the response times. It's not surprising about the security. There's still this entire aspect of when I go through fraud, when I have these disruptive events, I have to talk to that person. And if I'm sitting on hold in a really high impact, high stress situation, it's going to have a very negative impact.
Yeah, well said. I mean, Jeff, we're talking about people's money. So people are going to be emotional, especially when something goes wrong, right?
I know I am. Yeah, absolutely. And so you mentioned something, Melissa, that's I think is spot on, that human connection when there is a disruption, right? So there's this presumption of trust and this presumption of availability behind the digital, mechanics, if you will, of the process. And when it's easy, it's, anyone can do it, right? But when there is a disruption, as there can be for so many reasons, you start a new job, you want to change banks, you want to, you get married, you get divorced, and all these different things that can affect a bank account and your interaction with the bank. You want it to be easy whenever you can. And I've seen it here in Ireland, as a matter of fact, where a digital only bank really was expanding faster than any other bank in the country, for the easier offerings. And this is sort of my theme, I guess. But when they wanted to expand into, actually when customers needed to call them, they were really, their reviews and their ratings and their NPS scores and all the other indicators were very frustrated. Customers were very frustrated because they couldn't get a hold of them. They had not invested in the call center. They had, it was like an 80-20 investment in the digital operation. And so they're learning and sort of adjusting their human versus digital resources and approaches and so forth. But yeah, I've seen that for the last 2 years here in this country, in Ireland, where everything digital might be easy, but when it isn't easy, that's when people get a bit upset.
Yeah, and I think the lesson there is that digital first does not necessarily mean digital only. And
Exactly.
that, we have across industries, we have a lot of companies that have arisen that are digital first, that don't have any brick and mortar. And that's great. But ultimately, sometimes those companies are the ones where when you're trying to find a customer service phone number or a chat or an email, you can't do it. And they're almost intentionally sending you to try to self-serve, and you're frustrated because you've tried that already. You can't, you want to talk to somebody. So I do think that's an important lesson for any digital first company, is that you can't necessarily be digital only, unless I always like to, share this quote from my book that I wish I said, but I didn't, which is that customer service is what happens when customer experience breaks. So unless you have a perfect customer experience, then you don't need any customer service agents. But I have yet to find any companies that have that. So keep trying. But in the meantime, we've got to have that servicing available. I want to share some verbatim. So these, as I mentioned, are real online reviews. I'm going to read a few of them to you, and then just want to kind of get your gut feedback. I always love these because of how detailed they are. So in the traditional, we have somebody saying, very helpful app and efficient. It's easier for me to check my bills, transfer money for saving in checks and cash that I can easily sign and then dispose, since I don't typically have much time coming home from work to make it to the bank. Yes, that's a bit of a run-on sentence, but these are taken exactly as people wrote them. It makes my life easier because it's so easy to use and had so many options, like how to send money, deposit a check, look at my balance and my transaction history, even with an explanation point. You got to love that. And it was nice to be able to deposit a check from home at midnight and not have to fill out a deposit slip, drive to the bank branch and sit in the drive-through line just to deposit a check. Really like that one because you're talking about traditional banks becoming online banks and offering that same functionality. Let's take a look at the neobanks now. Absolutely loving it. They're amazing and making everything easier around you. I'm so happy joining. I'll be sending many of my friends and family on their way. I find the app really easy to use and very convenient for day-to-day banking. Would definitely recommend. And excellent features that make tracking, searching, and saving easy, such as instant notifications when your card is used, ability to search very easily your history, shared split bills, automatic pots, roundup savings, and automated spending reports. Highly recommended. All right, so there's a lot there, guys, but what stands out to you? Let's start with you, Jeff.
What stands out to me is the sort of sense of surprise on the traditional banking customers, that there's this sort of digital ease of use to avoid another part of the banking experience that they've experienced in previously, right? So I love that. I, for example, I've been banking in the States with a credit union in Alabama since 1986, and I'll get a check from anywhere, as long as it's a U.S. bank, and I can take a picture of it with my phone and have it deposited in 24 hours. I love that. And I've been able to do that for years. So it just seems interesting that for traditional banking, when it's easy, it's a surprise.
Now, Melissa, you work for a company that is a little bit of both. It's somewhat of a traditional company, but certainly the banking side where you work is really all online. You don't have branches on every corner. So how do you look at this traditional versus neo? And when you see that feedback, what do you think about?
Yeah, it's not surprising to me. And I think what I see is that the traditional banks, it's very focused on some very singular items, and that's depositing that check, making it easy to give you my money and not have to go to that, branch that I would associate a traditional bank with. On the other side of the neobank, so we doing research, we always find the same thing, which is that people would rather tell you about their infectious diseases than how much money they have in their bank account. However, they do rely very heavily on word of mouth and referrals from friends and family. And so that very first one of how they would refer their friends and family to this bank, I think speaks volumes, especially when that's how, people are really getting their recommendations on financial institutions. So not surprising in the moments of delight for both.
Yeah, I would just add that I really love the detail of these and the listing of the things that they really like. And you're right, the depositing the checks, I think, came up quite a bit, but some other things as well that were just, here's why it's easy. Here are the things that I like doing. I loved the image of, having to drive to the bank and sit in the line and just to deposit a check and sort of going through those steps, which is the old way of doing things, and certainly the way that some people still want to do things. But I loved that even in the reviews you saw some of that comparison. So we're going to take a turn here and show some of the concerns that customers have. These are the negative impacts towards customer experience, things that cause a review to be rated as negative. And for traditional, we see card services really rise to the top. And at the bottom there, we dig into, well, what are card services? What constitutes that? And you see things like card balance, credit increase, ordering new cards, card information, and card delivery. So let's stop there for a second and just ask, it's all about the card, the debit card or the credit card at a traditional bank. Is that surprising?
No, it's not. And I think there's lots of challenges, and especially lately with even, that bottom one of getting the card delivered to them. But, as we all focus on features and developing things that we believe that people want, it's not always the same, right? When we do research and we really try to dive into those customers, focus groups, in-depth interviews, surveys, whatever we're using, they don't always tell you exactly what they need. They tell you what they want. They over-index on how many times they would use a certain item, but they're not truly diving into what their problem is, and then we're not devising the right solution. So I think there's we're focusing on a lot of what we think that they need, and maybe it's not always what they need, and really getting them their card, the ability to reorder it, the ability to have it in their hand, the ability to transact. That's really their most important.
I often talk about the difference between voice of the customer and actions of the customer. And I think Discover does this really well. The voice of the customer is when you talk to them and you use surveys or focus groups, other methods of feedback, and they say, I want this, I want that. The actions of the customer is how they're actually using your product. And the funny thing is those aren't always the same. And certainly both of those pieces of feedback can contribute into what it is that that customers really need from you. So watch what customers are doing. I always say, if you have a search bar on your website, look at what people are searching for. It's a pretty good indicator that they can't find it, right? And they're not going to tell you that on a survey, but their actions are going to show you that.
It's really that unquantifiable research, as you were just mentioning, right? And using session replay and seeing what they're doing, the things that they don't tell you, that's really what's going to make you and drive you to be able to put in the features that they want.
So Jeff, we're going to hop over to the neobanks now. And what we see here is the ability to close your account is the number one negative contributor. I think this is so interesting because of this idea that our money is in the cloud. It's not in a physical bank. It's not in our wallet. It's just bouncing back and forth from app to app. And as you can see at the bottom, there are things like specific pieces of feedback that customers say: closing the account, returning my money, my account is locked, I can't access it. I would imagine this is where people start to freak out. And so it's not terribly surprising that it's negative. But what do you think on this?
Yeah, I have not personally had any account closure challenges, so I don't have a story to sort of tap into. But yeah, I mean, you said it. Like, if I can't get to my money, if I'm locked out of my account, if I just want to, all the trust doesn't take. It takes, I would say, seconds for all that trust for that digital currency that's out there, and you have this faith that your money is your money and it exists. All that goes away when you have those kinds of issues. not being able to close your account and control your money, not being able to use your card or access your account, and then having to call, and you've got long wait times, and all of a sudden that digital ease and convenience starts to look like, maybe a bit of a scam. That is this a real institution? Is it? That I think that's how I would feel. But yeah, it's it's not uncommon, I think, for a lot of I know with some digital services around software and so forth. Closing your account isn't the easiest thing. Of all the ease that we talked about earlier in this conversation, closing your account can oftentimes be the least transparent and the least easy thing to do with some providers.
Yeah, two comments there. I think one of them is I start to think of cryptocurrency and how the wild ride that people have taken, making tons of money, losing tons of money. And I've talked to many people that have had trouble getting their cryptocurrency back into real US dollars. And that starts to scare people, right? Is this for real? And if I want to get out, can I do it? I also think that the closing of the account process is really interesting because by definition, the company doesn't want you to close the account, right? And so that is probably why they don't make it easy. They don't invest in it because that's not a transaction that they want to happen. But I've seen time and time again, when you provide a great customer experience on the way out the door, it really improves your chances of either that customer coming back someday or them still telling their friends about what it was, how nice it was to do business with you. So don't forget that closure moment can still be a huge opportunity. All right, we're going to move to our 3 takeaways for the banking industry. And again, we try to bring this back to all different industries. The first is that convenience, which really is about being fast and easy, and app performance trump all other factors in choosing a bank. And let's face it, in so many businesses that we work with, that we spend our money with, it's about convenience and about the mobile app or about the digital experience. The second, customer concerns include mostly standard parts of the transactions. Thought it was really interesting that things like checks and getting my card and closing my account, these are not newfangled transactions, right? These are pretty basic things. And so we have to get the basics right. I always love talking about former Chicago Cubs manager Joe Madden, who says, do simple better. And he's talking about baseball, but man, when he retires, he's going to be a business consultant because that applies just as well to business. Do simple better. And third is that security and trust are paramount. And both of our guests brought this up a couple of times. If we don't have trust, if we don't believe that our funds are secure or that our transactions are secure in whatever industry that we are dealing with, we are going to go somewhere else. Simple as that. Melissa, thoughts on these takeaways?
I think these are great. Again, convenience, easy, right? I'm no longer necessarily choosing the bank on the corner, but I'm choosing the bank that I'm going to have the easiest relationship with. The customer concerns, right? The parts of the transactions, I think we need to really do better at the things that are simple, the things that people want. They don't need augmented reality. They just need to be able to get to their money whenever they want. So no, none of these are, I would say, are big shockers, and want to keep providing that customer experience for my customers.
Right.
And Jeff, I know you work across lots of industries. So as you look at these, do you see a connection to non-banking as well?
Absolutely. I mean, one example I thought of earlier, I remember 20 or so years ago when self-checkout came to retail, and it was a brand new piece of technology in that industry. And you had an agent or a customer service representative sort of hovering around, helping customers figure out, how it worked, how to pay, because it'll accept different kinds of payment. And here it is 20 years later, and that person is still there. Like, it never got fully automated. And, instead of having 4 checkouts, you might have 4 self-checkouts and 1 employee instead of the 4 you had before. Reference that when you put these processes together, that there still needs to be a human connection. And Melissa mentioned that before. So there's great ways to get efficiencies to serve your customers in the ways that they value, but have that person nearby to intervene so that the trust and security and relationship is maintained. Convenience can fly out the window very quickly when I don't know where to put, of all the places to put, you could put money into, like, I want to know where to do it, so I don't look foolish, and I don't, that kind of thing. But I think that's a great parallel in the retail industry, is that digitization, that automation, that cost reduction, and so forth. That convenience may have been for the retailer, may not have been for the customer. So, just make sure you're balancing those things out in your business case for any digital process.
Very well said. Jeff Sheehan, customer experience consultant, Melissa Douros, head of digital product experience at Discover. Thank you guys so much for bringing your insights and thought leadership to the show. We really appreciate having you on.
Thanks so much, Dan. Appreciate it.
Thank you. It was a pleasure.
And if you're interested in more data from Cluetrack, including the full U.S. banking CX tracker, go to cluetrack.com. And you can also ask for a demo of their software so that you can start digging deep into your own insights in your own industry. Highly recommended. I'm Dan Gingiss, customer experience speaker, author, podcaster, and coach, and I am so happy to be here with you every episode of 𝐭𝐸𝐶Y. We'll see you next time as we dig into yet another industry.